Okay, so we have 3.5% FHA for down payment, and you mentioned another 3% for closing costs. A lot of people don't really realize that at the back end of it, are those closing costs, and that's usually out of pocket, or pretty much out of pocket. So the buyers need to be prepared for that as well, of having those funds available. What do we have included? Like, what are the closing costs?
Yeah, definitely. So ultimately, I want to just kind of say one thing first and foremost, that the down payment is required to come from you as the buyer. The closing costs, it's more favorable if you pay for those as well. However, there are ways to structure it where you don't have to pay for some of those, and so ultimately you're just going to want to, again, you're going to want to talk to a mortgage professional to see how that can be structured. A lender can pay for those through a lender credit, your interest rate, seller through a seller credit. So there are other ways to pay for it, but again, more favorable for you if you pay for them yourself. The closing costs are made up of a whole bunch of fees and costs to buy a home. There are true fees to buying a home, such as an appraisal, an origination or underwriting or processing fee. There's title and escrow fees, recording charges to record the lien with the county. There are items that are what we call prepaids, so prepaying for a certain portion of property taxes, insurance, and when you buy a home, typically those are prepaid for anywhere from 6 months to a year, and additionally establishing what we call an impound account. If that's something where you want your property taxes and your insurance paid with your mortgage payment on a monthly basis, the lender who finances your loan, they will actually collect those on a monthly basis so that they can pay them for you. And they really do have to collect a certain number of months up front so that when it is time to pay those property taxes and or insurance 6 months, 12 months down the road, that they've established a little bit of a savings account for you. So when you're talking about all of that, the costs really do they do build up, and so on average you're looking at about 3%. I would say that's probably on the high side, but we do like to prepare clients for. Yeah, definitely. Yeah, 2 to 3% for closing costs.
And to piggyback on going back to, it's not 100% required by the buyer to do full 3%. There is sections in the residential purchase agreement that you can split. Specifically the escrow fees, you can split 50-50 with the buyer and the seller. You can always negotiate in that offer of who pays what. If you want the seller to cover some of these closing costs, we could put that in the offer. Pretty much everything's negotiable, so it's not a requirement, it's just a baseline. There
are a lot of parties that make homeownership possible: title and escrow, appraisers to conduct an appraiser, and so ultimately closing costs will be paying for that portion of it. Is that, you know, everyone who's involved in this transaction to make this a possibility, and there are costs involved with that.
Yeah, processing fees, recording fees, county fees, tax, all that just gets bundled up into all these closing costs. So it adds up, and then it's just how California and pretty much the whole nation is. It's closing costs are a thing, unfortunately.